Yeah, not the quiet summer we were really hoping for, but our view is the market has digested some of that negative news in the US, especially on the macro front, and acknowledged that actually the picture is not as bad as maybe was feared. Yes, we've seen a slight weakening in some of the original job data, but actually the most recent data points show us that things are fairly healthy. Growth still looks pretty robust. We're seeing 2.8% annualized growth for the US. And actually, if we look at our current activity indicators, worst case scenario is still trending out at 1 to 1.5% trough growth rate. And so actually things feel pretty healthy.
So what are you telling clients right now, particularly on the equity side, about how they should be navigating this environment and positioning and allocating right now?
Well, our message over the last few weeks has been very clear. Just stay invested in the market, be thoughtful around where you're allocating capital, take advantage of some of those very high quality names. They've come off a lot. But actually don't think about this as a significant flight to safety. Don't think of this as a big risk-off event in the sense that the underlying health of the economy and of especially the US capital market is still very much there.
How do we explain the massive valuation reset that we've seen in big tech and particularly around AI? Can you stay invested in that space given where valuations are at right now?
Well, so our views over the last few months have evolved, specifically around the Gen AI cycle. We still think it's transformational. We still think it's going to create some significant winners. But we actually also have to think about the fact that there needs to be a return on investment that comes from that capital investment. And so what the market has been trying to digest recently is we've seen huge floods of capital going into developing these AI models. What is the return that's going to come from that? Now, our view is selectively in the hardware enabling technology space, there are huge winners. And we've already seen that acceleration in growth. Where we're yet to see it and where we're finding some interesting opportunities is what are you going to find in the software space as you start to apply those Gen AI capabilities into the product that you're delivering. And that's a little bit more nuanced because it's not clear who the winners and losers are and where that transformation is really going to have an impact.
So if that's the case, why haven't we seen a broadening out of the rally? Again, when the money starts moving back into the markets, it goes to NVIDIA.
I think because right now, the trade on Gen AI in the public market space is the hyperscalers investing to develop their underlying models. And that means for every single dollar they're putting into work, predominantly is going into the hardware technologies, NVIDIA and others, on the semiconductor and server side. I think what we're going to see over the next 24 months is the evolution of that into the software trade. Again, it's difficult to say who wins and loses in that discussion, but there will be significant winners where they can advance the quality of the product offering they bring to market.
Any other sectors that you like right now?
Well, so actually thinking about it more holistically, the area we've been really focused on in the last couple of quarters is the small cap space in the US. And that's a cross-sector statement. Parts of the technology space actually do look very interesting, where you haven't seen the same reset in valuations over the last 18 months that you've seen in the mega cap space. But also, if you think about what's happening in the underlying US economy, especially as we start to see the Fed normalizing rates, that should be very favorable for the small cap space. These are companies that are levered into that domestic economy, and these are companies that have floating rate debt, whereas you start to normalize rates, the interest expense line item should be better, the margin should be superior, and earnings should start to progress quite healthily.
Okay.